Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more.
Good morning, everybody. It's Thursday, March 27th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here at May corn up 3/4 at 452. May soybeans were up 7 3/4 at 1008 3/4, and May Chicago wheat was down a penny at 534 1/4. This morning we had weekly export sales. Old crop corn just a little over 1 million for the week. Upper end of the range was looking for 1.6. We were 0 for new crop. Soybeans, pretty disappointing week. 338,500 for old crop. Low end of the range was looking for 300, and we were a net cancellation, net negative of 21,900 for new crop. I know we'll talk about that here shortly. For wheat, also disappointing. Low end of the range, 100,300 for old crop, 11,200 for new crop. Meal sales in line with estimates, 165,600, and a real solid week for the oil complex, 44,500. So that was well above the top end of the range. A couple of pieces of outside news. Yesterday, President Trump announced 25% tariff will go in effect on April 2nd for all imported vehicles. There was also some discussion about potential tax breaks, tax deductions for folks that purchase American-made cars. So I think there'll be more to follow on that deal. But that was a piece of outside news there yesterday afternoon. So with that, Ben, maybe kick us off. A few thoughts this morning. We're a day closer to the USDA report. So give us some thoughts, and then we'll throw around the room.
Yeah, yesterday corn did not have a good day. It settled below its 200-day moving average. It was really on kind of light volume. So it'll be interesting to see today if they can recover. It doesn't look good technically, but again, Monday we have a big report, and we'll quickly kind of move to April 2nd guidance from Trump, as well as starting to get into maybe a little more focus on weather. Eastern Corn Belt looks really wet next 2 weeks, so just a quiet market. Not real inspiring. Technically, doesn't look good. Yesterday was our lowest close by 1/4 cent in a long time. So we'll see what today brings. I wouldn't think that we get too crazy today, but sometimes the technicals, when you move through them, they can kind of open up the floodgates on bids and offers. So we'll see if there's an appetite to start moving towards, probably at this point, getting close to being short and maybe building a short position. I think that's that money flow is kind of the risk here. But we get a big data dump on Monday. We're probably pricing in a lot of negativity at this point. We'll see what happens.
Yeah, Justin, ethanol production yesterday come down a little bit, but ethanol stocks, interestingly enough, are still at levels that we saw, just before COVID into COVID. So what's your take on that market?
Yeah, we've just been producing a ton of it, and I think, ethanol exports have been strong, and that's been slowing down. Same with biodiesel, the amount of oil used has been going down too. I think it's all part of this renewable fuel standard, some of these different programs that are expiring, no clear direction on forward guidance. Trump did, or supposedly told, the biofuel industry and, the energy industry to get together and figure out a renewable fuels, renewal, what that looks like. I do think both sides do like renewable fuels for a lot of different reasons. We've talked about this a lot of new investment in biodiesel and some of these aviation jet fuels, and lots of billions of dollars are pumped in there. So overnight soybean oil, or this morning, up 100, over a penny a pound there. Also sold 44,000 tons of soybean oil, so it's got absolutely clobbered. just because people are just giving up, myself included, just kind of waiting to see where things kind of settle here. So maybe we're finding we've been selling oil every time we keep breaking. So now we've sold way more than we're supposed to. Luckily at a time when we're, biofuel or demand has been going down, kind of waiting on these things. So if there was some friendly announcements in that area, I think that'd be really, really supportive at these low price levels that we're coming off of, especially when global veg oils are kind of tight. Malaysian oil stocks are falling. That's a big part of why we're doing business here. So I think that's a really interesting one here to watch in the coming weeks. Just like a lot of these things, next week. I mean, Ben said it's April 2nd, March 31st. I think there's a ton of money on the sidelines. We're making kind of bad trades on low volume, but I think people are just getting out of stuff, putting money on the sidelines to see if they have any convictions in the next couple of weeks. And I guess I'm kind of in that camp right now. And I think if something friendly or change, I think there's money that wants to play in these markets pretty quick. So
yeah, I hope that, and if you look around and what he's done so far, there seems to be a sense of urgency when it comes to a lot of the things that he ran on. They moved right into deportations, really strong military presence against the Houthis. So there has been action on those things. And I hope that in agriculture and on the things that he has to address on April 2nd, that we see the same sort of, kind of decisive moves and leadership that could help our industry, because I think that we don't have a lot of time to wait this out. And that's been kind of the message. But on April 2nd, we get to find out if we're going to wait this out or not. So
well, I think the one thing too that I've gathered through this administration versus maybe his first run was his willingness to work with folks. I mean, he's using tariffs, certainly to bring back, an equitable solution to trade, but also, in some of these negotiations, right? He's talked about they're looking to get a TikTok deal done. So will he be lenient on China for different tariff things because he wants to get a TikTok deal? Just he's making deals and doing a lot of these things, not necessarily just, hey, I'm slapping them and we're going. You know what I mean? So I think that's the tricky part for me is what deals are happening.
Yeah, I think the tough part there is that China's already struggling from a demand point. Their economy's not great. They're not rock and rolling, in general, as far as, demand. So, go have them like buy a bunch of ag products. I don't think that play is going to work as well as it did the first time. So, I'm personally leaning heavier towards if they have the same attitude as domestic production, right? Like, let's ramp domestic demand. If they have that kind of game mentality or mentality for ag and not have to rely on China to buy our ag products, or, like, how do we use it more here? If that goes as part of, energy, cheap energy prices, like use as much as we can here. I think that's kind of going to be the key. I don't think you can use the same playbook as China, phase one, maybe hold their feet to task a little bit to help. But I think you're going to have just stronger and stronger domestic policy personally, because you can't force South America not to plant, for example, right, to expand. So that's kind of where my head's at, is how do they attack that part?
So Justin, I guess maybe clarify that for some folks. So like, what market is the biggest winner there? Right? Like, what can you do domestically? I mean, it's soybean, obviously, biodiesel, things of that nature.
Well, I think soybeans and corn. I mean, aviation fuel, a lot of that comes from ethanol.
Okay.
So there's some of these big plants that if you put in a really strong policy, I don't know if it will or not, obviously, but yeah, you could boost demand for both. Forget that. Obviously, there's a ton of DDGs, there's a ton of byproducts that go into animal feed. I think these renewable diesel projects were well financed, support from both energy sector and ag. So both sides like it. It's not as, like the first term, there's a lot of fight back. Like, let's get rid of these biofuels, right? Like, it was like, does Trump want to support energy or support farming, right? You're kind of stuck in a hard place. But if they both agree that this is we've invested a bunch of money and this makes sense, maybe that's a good dollar to spend. I don't know.
Yeah. How do you fix wheat?
Yeah, it's a century-old question. Yeah, that's just wheat.
That was a trick question, guys. That was no answer for that one.
Yeah, it's a loaded question.
Yeah, for sure. No, very good, Ryland. Interesting to see. We'll talk about meats here for a second, but choice cut up almost $13 this week, which is just insane. And hogs are just mixed into this afternoon's report. Anything you're looking for? Major announcements there this afternoon?
I think overall, I think the focus really is going to be on the hog and pig report this afternoon. I mean, no question about it. I mean, the breeding number, I think, is going to be the big one. Most of the weight groups are expected to be about 1% higher, with the exception of the kind of heavier weight groups. So we'll see. That pigs per litter number has been, in the forefront, and I think it's going to show the pig crop up, last quarter's pig crop up, to a pretty large degree. So we'll just see what the numbers say. I mean, the market's obviously really cautious here. You've got the report today. You've got tariffs, potential tariffs April 2nd. So it just seems like we're kind of stuck here. Every time it looks like we're about ready to go one direction or the other, it just kind of settles back down. So would expect that trade to kind of persist now. I mean, there was an article out about Brazil actually pressing Mexico to import more pork before these U.S. tariffs, and we were kind of seeing perhaps signs of that on this on this last export report. Just very strong. I mean, they were up 77% from the previous week at 31,900 metric tons. So, I mean, demand is still pretty strong here. That's why it feels like we're holding up, but we'll see if the report or any of the kind of headline trade or the new, any kind of new regulations or trade tensions really kind of disrupt that. Yeah, and again, the beef market here screaming. Packers obviously need some margin here to keep paying these prices for cash. I mean, right now it looks like we saw a little bit of early trade at the beginning of the week. Now we're kind of waiting to see what happens here with asking prices holding around 212 in the South. I think there's still some little bit of cautious optimism here. I mean, I know the price action was a little bit of toppy, reversey, last week, but otherwise seeming to kind of stabilize here. So I think a lot's riding on cash, and I think the market is just kind of waiting to see what happens.
Very good. So we'll get that report here this afternoon, and then we'll certainly have something to visit about.
So Dan, to cut you off, but I was thinking about your comment on wheat. One thing which I think is interesting, if you just look at all the different wheats, massive short position everywhere. Matif wheat here. You look at spring wheat prices, like the one that we could probably lose a decent amount of acres on Monday. We'll see where we end up. But I mean, if you talk about just low priced, I mean, we're at the same price as we were 20 years ago for a very high quality specialized wheat. That could be an interesting one in my opinion, kind of looking at this, where soft wheat's kind of that, that wheat that's just, it's where all the funds play, that it's just doesn't have a high value. When it gets cheap, you try to price it as feed. We got spring wheat, high protein, a lot can go wrong. That could be a really interesting one. Just kind of, just thinking about your comments, that's one that just looks like with all the things that we've done, like compared to inflation and everything, that's probably the cheapest it's maybe been in 30 years relatively. So beans take some of those acres then? How's that? Probably. I think so. I think, that's gonna be an interesting part on the corn bean mix, is just all those little crops. Not even little, cotton being one of them. Obviously, I think a lot of people are on the same page that we'll lose cotton acres. So that could be the variable too. We talk about the corn bean mix, but the corn bean combined, what's that number? Has it taken acres from spring wheat, cotton, sorghum, lots of these other crops, so I brought it up to watch Monday.
I brought it up on Tuesday after we saw planning progress and stuff. And what's your take? I mean, they've been rocking and rolling down south. I mean, through Texas and things like that. I mean, you're 65% plus planted down through Texas. Is that I know if we have really good progress up north, they can, sometimes we'll plant more corn because everything's good and going in well. I mean, does that factor in at all, Justin, in your opinion?
Yeah, I think it does. They've also had fires and I think they're super dry in a lot of those areas, but so it makes sense that they're planting fast.
Mhm.
Yeah, I don't, I'm not, obviously in the I states, if you start, if you obviously we're planting corn early, you kind of keep going. What's interesting now is a lot of beans are planted before corn in a lot of areas. So it's kind of, that's changed too. Yeah, so I don't have a strong opinion on what that means for the mix, but certainly I think even Texas, like cotton acres will be down. Sorghum sounds like it'll be down, probably planting more corn. So I was just kind of trying to comment on your wheat thing there. Like that would be one I would, because it's already kind of small acres. It's kind of like oats, but it's bigger than oats, obviously. But when you can have, if you off by 1 million acres, that's a big deal for a crop like spring wheat, especially when it's been just pounded so low. So that's just one to keep an eye on.
Yeah, that's good stuff because that hasn't been on our radar. So certainly, that'll be one we key in on, and just to see what shakes there.
Yeah.
Very good. We've just come into the open here. May corn's up a half, 451 3/4. May beans are stronger here this morning, up 10.5 at 1011.5. And May Chicago wheat is down a half right now, 534 3/4. Tomorrow's Friday, which is everybody's favorite segment. We'll have a Fun Fact Friday with Brian, so be sure to tune in. You never know what you're going to get. And also, got a couple days left, so don't wait. Give us a call. Be sure you're got everything positioned the way that you'd like ahead of that 31st report. We'd love to visit with you. Jack's got more info in the outro, but special deal that we've been running for last month and a half or so. So that's going to be up April 1st, so give us a call. We'd love to visit with you. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that follows along. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments there this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.